Hi, this is PR Sundar. Welcome to this special episode. I am going to recommend some product for you. I am not a SEBI registered, so therefore please consult your financial advisor before making any investments. So the first thing is that you all know I am a big fan of stocks which offer high dividend yield, and I also am a big fan of debt instruments, and I also invest in gold. Maybe before going to that, maybe I can just show you my portfolio. Here, this is my account. So, I am showing you my account. I have investments which is about 10.61 crore, and I have a profit of about 63 lakh rupees. It's 6% only. Of course, this year, things have been very, very bad. So, this is written in the last 6-7 months. But you look here, this is BBETF. So, this is Bharat Bond Exchange Traded Fund. And see, I have this value is for about 2 crore. And then again, Bharat Bond EBB ETF, Edelweiss Bharat Bond Exchange Traded Fund, maturing in 2030. That's for 2.71 crore, where I'm sitting with a 16 lakh rupees profit. Again, EBB ETF, maturing in 2031, 1.66 crore. So, out of 10.6 crore, so nearly half of my money is invested in Bharat Bond. Then I have a Hero Motocorp and some shares of Idea. Then I have OFSS, PFC, PSU Bank Bs, REC Limited. Then you look here, I have a sovereign gold bond. That I have about 2 crore. So if you see about 10-11 crore investments, 4-5 crore in debt instrument and 2 crore in gold, and the remaining only in equity. So this is called diversification. So don't put all the money in one instrument. Don't put all the money in equity. Put some money in equity, some money in debt, some money in gold. So that in case of adverse situation, so your portfolio will be not doing very, very badly. Of course, when the things are going well, you are not going to get a huge return also, but it's a diversification. And if you remember, I also talk about cryptos. And while talking about crypto, vault, I said these are risky instruments. I said, you can consider investing 5 to 10% of your portfolio. But what has happened? The risk has come and hit our face, and then vault has defaulted. And now the people are coming and telling me, sir, you promoted vault, you promoted a fraud. How do we know that they are fraud? In 2007, Reliance Capital was trading around 3,000 rupees. Reliance Infra was trading at 3,000 rupees. So, are you going to say Dhirubhai Ambani is a fraud? Are you going to say Anil Ambani is fraud? So, these are the business cycles. The number one business family in India, they also lost. So, in a business, loss or profit is common. So, if you have invested only 5 to 10% of your portfolio, that would not have affected you much. And many people, they say, sir, my entire life saving, I put it in vault. Most important thing you should understand as an investor, don't put all the eggs in one basket. So, if I have my money, I put something in real estate, something in gold, something in bank deposits, something in mutual fund, something in direct equity, something in trading. So, that is how you diversify. Even the money that is coming into stock market also, something in gold, sovereign bond, and something in equity, something in Bharat Bond, debt instrument. So, today I am going to talk about Edelweiss Bharat Bond. This is a fourth tranche. And this Bharat Bond issue is open on December 2, that is today. But of course, this video is being shot on Friday, so will be released on Saturday. So, I should say yesterday. And then the issue will be open until December 8th. And this time, the fund that they are offering, if you buy, you will be getting an yield of 7.5%. And considering the other bank FDs, even 7.5% is still very, very good. I don't think that any established banks offer 7.5% interest for FD. Earlier, I have already compared the difference between FD and Bharat Bond, but still, if you have not seen that video, let me tell you once again. You put money in bank FD, the interest you get, that interest is taxable as per your income tax slab. Most of you who have a surplus cash to invest in Bharat Bond, you will be under 30% tax. Even if you get 6% interest from the bank, 30% of that, about 2% you will have to pay tax. Whereas Bharat Bond, they don't pay you interest. The interest will get added into the net asset value. In 2033, you will get the money total in a lump sum amount. There again, it is not interest, so it is considered as a capital appreciation, so capital gain. So you will end up paying 20% capital gain after the indexation benefit. So what is indexation benefit? I cannot explain, there will be a too long topic. Maybe you can search on Google. After the indexation benefit, you pay 20% capital gain tax, then your tax outflow will be very, very, very nominal. There are advantages. Bharat Band, it gives higher interest rate, and then you have a lot of tax benefit. And then people like me, we are not interested in putting so much money in Bharat Band, but we put the money in Bharat Band. That Bharat Band, we give it as a collateral to the exchange, and we get the limit, and then we do the trading. So we get interest from the Bharat Band also, and we get a trading profit also. So that is the biggest advantage. Of course, FD can also be given as a collateral, but that's not the difference between FD and Bharat Band. But Bharat Band can also be given as a collateral to the exchange for trading in futures and options. The money that they are collecting from us, where are they investing? They invest only in government companies like PFC, REC, ONGC. So there are so many companies are there, and they always invest only in AAA rated companies. Your money will be 99.99999% safe. And because the government companies, if you think that the government companies are not safe, then which company is safe? Always I tell, when you are investing, you should look for three things called SLR. Safety is the first. That safety is with the government companies, no issues. Liquidity. The Bharat Band is tradable in secondary market. Although maturity is 2033, in case if you want to sell in the market, you can just sell. In case of emergency, you can sell it in the market, you can get the money. Liquidity, there's an ample liquidity. And the third one is return. So safety, liquidity, return. In all three parameters, Bharat Band is really very good. And also, this exchange traded fund, they handle huge amount of money. So therefore, their expense ratio is the lowest in India. And if I'm not wrong, this will be the lowest in the world also. The first question is that, sir, why should I buy Bharat Band directly from the Edelweiss mutual fund? You say it is available in secondary market, so why can't we buy in the secondary market? If you want to buy in the secondary market, you can look here. So this is the website you have to go and see, edelweissmutualfund.com, types of mutual funds, passive debt funds. Anyway, this link is given in the description also, and you can see what are the various mutual funds you have and what is the indicative yield to maturity. So here you can see around 7%, 7.5% only you are getting, and the new one also, so they are giving almost the same. But what is one advantage if you buy the new one? If you want to buy the same Bharat Band in the secondary market, you can do. But when you buy from the secondary market, you pay brokerage, you pay GST on brokerage, you pay STT, you pay stamp duty, you pay NSE transaction charges, you pay clearing member charges, you pay SEBI charges, you pay education cess and whatnot. They all add up to a significant amount. But when you buy from the fund house directly, so you don't pay anything. That's the advantage. There is a disadvantage also. For people like me, when we invest in Bharat Band, we give it as a collateral to the exchange, we start trading, and the secondary market you buy, in T+2 day, the shares will come into your demat account. You can immediately pledge, next day onwards, you can trade based on that. But this new series fund, when it comes, normally it takes about 1 month to 2 months to be approved in the NSE list. Until that time, you may lose the opportunity cost in trading. So that is a disadvantage. So there is one advantage, one disadvantage. One is that you don't pay brokerage, service tax, stamp duty, GST and those kind of things. That's the advantage. Disadvantage is that you have to wait for 1 or 2 months for this to be approved by NSE so that you can start trading in stock market. If your aim is only to invest in Bharat Band ETF, you don't want to trade, then there is no issue. This is a very important thing. I've been talking in favor of Bharat Band for a long time. What has happened, some people, based on my recommendation, they bought the Bharat Band. And now the Bharat Band price has come down. And many people say, sir, you told us, so we buy for 1,100, now it has become 1,050, 1,060. Sir, it has come down by 30 rupees, 40 rupees. So why, sir? You said this is a debt instrument. How can this go down? So for them, let me try to explain in some simple terms how the bond prices move. Listen to this story very carefully. Let us say you have got 10 lakh rupees with you. You go to a bank and you want to put money, the 10 lakh rupees in bank fixed deposit. Let us say the manager tell you, sir, I will pay you 10% interest for 1 year. Then for 2 years, it will be 20%. 3 years, 30%. 4 years, 40%. 5 years, 50%. Just for the sake of simplicity, we assume simple interest. So what the bank manager tell you, sir, you give me 10 lakh rupees FD, but one condition, okay, in between, you should never come and ask money. You come back after 5 years, I will pay you 15 lakh rupees. So that's an agreement. You put 10 lakh rupees, 5 years, 5 lakh interest. So after 5 years, you come, I will give you 15 lakh. But in between, you should never come, never ask money. You agree, go and put the money in FD. What has happened? After 1 year, you have some emergency. So you put 10 lakh rupees, the bank gives you 10% interest. So that means after 1 year, so what is the value of your FD? 10 lakh is the principal, 10% of 10 lakh, that is 1 lakh. That is the interest. So the value of your FD is 11 lakh rupees. But of course, you cannot go and ask for 11 lakh rupees from the bank because they say you have to come only after 5 years. But you have some emergency. So what you do? You are coming to me. You are asking my help. Sir, you are my good friend, right? Now I'm in emergency. I want money. Sir, you can keep this FD with you. When the maturity comes, you take the money and please give me money. Then at that time, how much money you will demand from me? Will you demand 10 lakh or will you demand 11 lakh? So you will demand 11 lakh. Why? Because your money is 10 lakh rupees, 1 year is gone. So 1 year interest is included in that bond. So therefore you will ask for 11 lakh rupees. If I also agree, I can give you 11 lakh, I can keep the FD. As and when FD matures, I take the money. So this is one story. Now, coming to the second story. Same thing, you had 10 lakh, go and put it in bank and bank told you come back after 5 years, I will pay you 15 lakhs. And after 1 year, you want some emergency, you want some money. What has happened during this last 1 year, because US inflation is higher, so they increase the interest rate. In India, Reserve Bank also increases the interest rate. So let us say, now the banks are giving 20% interest. So that time, if you come and tell me, sir, I'm in trouble, I want some money, please help me because my FD is 10 lakh rupees. Now added interest is 1 lakh rupees. Sir, please give me 11 lakh and you keep this FD. Do you think I will keep? No. Why? If I take your FD by paying 11 lakh rupees, for the remaining 4 years, I am going to get only 10% because a bank assured only 10%. Instead, that 11 lakh rupees, if I go and put it in FD in my name itself, I am going to get 20%. So why should I give you 11 lakh? That time I will start negotiating with you. No, I am not going to pay you 11 lakh. Maybe 10.5 lakhs I can give you. So that means the value of your FD will not be 11 lakh. It will become 10.5 lakh only. This is the second story. Now come to the third story. Again same thing, 10 lakh rupees, put it in FD, 5 years, 10% interest per annum. After 1 year you got into trouble, you are coming to me. What happened? By that time, the interest rate in the economy has gone down. Now the banks are giving only 5%. When you demand the money from me, will you ask for 11 lakh? No. You will say, sir, you give me 11 lakh rupees, for the remaining 4 years you are going to get 10% interest. But if you go to the bank, you are going to only 5%. Sir, I will not give you for 11 lakh. Maybe you give me for 11.5 lakh. So, understand the three stories different. Interest rate in the economy is the same, then your FD value will be same plus the time interest. If the interest rate in the economy goes up, your value will go down. In the interest rate in the economy goes down, your value will go up. Therefore, the bond value is just like this FD value. Will change as per interest rates. But now after 1 year your FD value may be 11 lakh, maybe 11.5 lakh or maybe 10.5 lakh. Forget about it. If you don't worry about anything, if you are holding it for 5 years, at the end of 5 years, the bank has promised you 15 lakh rupees that they will pay you. Nothing to worry. The same way, today if you are buying this Bharat bond, they are assuring you 7.5%. If you are holding this bond until the next 10 years, until 2033, you will get 7.5%. But in between, if you want to sell it in the market, let us say 1 year is 7.5%, let us say you put 100 rupees in Bharat bond, after 1 year 7.5% interest, so your value become 107.5. But depending upon the interest rate at that point of time, it may not trade at 107.5, it may trade at 108 or 109 or 110, or it can be 106, 105 also. I have explained to you how this bond prices. So based on my recommendation, if you have bought the Bharat bond, if you are sitting in loss, nothing to worry, you just hold until maturity, you will get back the promised rate of return. So I hope you enjoyed watching this video. Thank you for watching.